Hello guys, glad to have you on board again today. We'll start with the cryptocurrencies obviously, but today regarding the other asset classes we're going to do something a little bit more different than the usual stuff as we'll focus on the dollar today. That's something I wanted to do for quite some time, and obviously yesterday is definitely heading in the direction I was looking forward for. So we're going to talk about this. So that doesn't mean we're not going to cover up the stock indices and stuff like that, but I'm not going to talk about the stocks themselves. I'm not going to talk about that. I'm going to make a quick overview of global stocks just to understand the macroeconomic context we're trading into, the geopolitical context most likely, and just digging a lot deeper into my dollar scenarios, what I think, what are the technicals following my beliefs, making sure that once again I may be biased, and I totally agree with that, and let's be honest, I don't nearly give a shit. I'll explain everything about that, but so today is more likely a special around and surrounding everything I have around the dollar. It's going to be the major topic. So anyway, let's get it done with the cryptos first, which are somehow correlated with dollar, but that doesn't nearly mean that's going to be a big game changer. It's most likely the BTC version of BTCUSD spread chart that's moving out there. So I'm sorry guys, but it is there. We've got a bearish engulfing reversal structure out of this, so the crazy bulls targeting new highs, whatever shit this is, to the moon. This is not a good sign. That doesn't mean I won the battle. All it says is that you need to understand that what's been played before is not what's going to happen now. And that's the major, let's say, wrong context structure I've been seeing recently. I see some bears who saying, look at this, the last time we've done such thing, we just made new lows, so we're about to make new lows. No way. We're no longer crashing. I hope you definitely understood that. Some people are still raging for more bearishness or whatever. It's possible. Once again, everything's possible. If you're trying to forecast the future, you're definitely in the wrong place. We're here to assess odds and risk-reward potential. What are the odds to be proven right or proven wrong? We definitely try putting the odds in our favor, obviously, but still, being right, being wrong is not even under your control. You can never ever imagine being controlling stuff like that. It's about forecasting the future. So this is the subjective part of trading. You just need to build a goddamn conviction and be strong enough to follow it. But still, if you just do this, you trade gut kind of trading, which means you trade what you think, and you better hope it works just fine, because if it doesn't, then you're going to have some trouble. So this is why we added a technical layer topic, which we call a strategy, technical strategy, that just makes sure that you put odds in your favor with a decent risk-reward ratio. And then, even if you're wrong, even if you were biased, even if what you thought ended up being completely on the opposite, then normally, as long as you risk manage, then you somehow gonna be right at some point. You cannot just be wrong and wrong and wrong. It may happen a few times in a row. It will probably happen at some point, but no one can be just wrong. That's what you need to understand. Just as no one can be just right. So if you're betting every fucking thing on a single scenario, you better hope this one goes right, because if it doesn't, and then you're lucky, but the next time you won't be that lucky. And even if you're lucky 10 times in a row, sooner or later, the shit will hit the fan, and the losses will catch up on you. This is why this technical layer and this risk management is absolutely not even a question. It's absolutely necessary. If you're investing in the market and if you intend to do it repeatedly, then there's not even a chance you can survive out there without a technical strategy and risk management. Anyway, so cryptos, like I said, I'm sorry I anticipated this because I know my goddamn job. Now it's on the prices. That doesn't mean I won the battle, it just simply means I'm out of risk. So either right now it gets to my target, I take some money, it retraces upward and fuck up my stop loss, I'm out. But my stop losses are at the open price of last week. So if we're bearish, we're not even going to retrace this price before getting to my target. So I'm sorry, but odds are definitely in my favors right now. All right. In a daily chart perspective, what we see is obviously expecting some bearishness to come forward. Not necessarily just right now, but are we going to break the previous week's low? I definitely think we will, and we've got pretty decent odds to do this just by today or tomorrow. So the thing is that this structure is bearish. You must have recognized it if you are like an Elliott wave trader or whatever. All right, this is a 1, 2, 3 overlap, 4 and 5. So normally we have chances in here to have an extended wave 5. If the market is about to bearish trend, all right, we got from bullish trend. Like, remember what I said, we're not going to do bullish trend to bearish trend unless we're in a range. All right. The thing is that I think we're in a range. The daily chart time frame definitely shows that we might be at a range boundary. So are we about to do bullish to bearish? Yes, for just one reason. It's impossible to do that unless you've done this kind of stupid shit. This is exactly what we've done. Bullish and excessive market trading, which means we can reverse just like that, going from bullish to bearish. So yes, we might have terminated some bullish oscillation, and we might just start a bearish trend just out of this, just because you've done some stupid pricing. Let's fuck it. All right. So you know my targets. I'm not really crazy fucking bearish. I think I'm gonna profit take right at 6,800, even though I think price may eventually go a little bit further below. All right, I'm not crazy fucking bearish anymore. I'm not bearish trending, and I hope you understood that by now. Otherwise, you and I really have a problem, and you really missed the core informations I wanted to share with you guys. All right, my goal is to build a goddamn range and take a couple trades at low risk in order to very, very further in time from now catch up another buy and hold entry, just something like that. All right, I want to see low volatility in the expected trading area, and I'll be ready to buy again. All right, until then, some tiny positions, short selling, no more than that, and I'm still a buy and holder. You really need to understand that. Yes, long term I reverse to bullish, and am I targeting new crazy fucking high like $2,000? Not even a damn. All I think at that stage is that I'm buying until we traded at least those areas, and I want to see how they react to see if I want to open up the Saint Grail and open up the historical highs, or if we're just going to fail in here and create a big range for the long run. You should know by now. You should know that. I hope you should know that. That's the big plan, all right? The major long-term plan is to test those areas, and if they react bearish, then fuck the bulls. I mean, I'll let them buy for stupid crazy shit. I'll be just selling them their bitcoins, and I'll still have some, all right? But far less than the one I have right now. Anyway, that aside, so the thing and the goal in here is to build a higher low. All right, in this area, and in order to get to this area, we're here. If we resist here, we're probably just consolidating from this point to this point. It's hard to say how we'll build this consolidation. It can be tricky, it can be trappy. All I can say is that normally if you have those prices like 8,700, you're fucking safe. All right, so you put the stop losses at break even, you move on to something else, and you just let the market do the job. All right, so if you overthink things in a range, is where you're gonna get tricked. So don't do this. All right. Just learn to let it go, and especially when we're range trading. If you've got decent prices because you took the risk with me, just freaking fucking let go. All right, you've got two options. Either you play the short-term intermediate game, in which anytime we get to 6,000 far to let's say 6,200 to 6,800, you profit take and you don't even see anything beyond that. If you want to target right into the long-term buy and hold area, which means you're going to have to hold this trade for a longer time period, then I think you can do it, but that's not my personal choice. I want rather like get in, get out, eventually get in again, probably at the same price, and get out again. Just play the two sets of waves that are the most common standards in a range, all right? Two sets of waves in one direction, two sets of waves to another. That's just what I'm playing. I'm not saying this will exactly be the topic, but in a range, I don't know. So I trade the most common strategy, which is two sets of wave one direction, two sets of wave another, and anytime we try to break something, I'm going on the opposite direction. All right, simple as that. We try to break, I'm going on the opposite direction. Fuck the bulls, I'm going on the opposite direction. That doesn't mean I'm right, but I know my structures, I know my range, and so far it's been proving me right. So we'll see what the future will tell us, but I think normally my targets will be hit probably this week or next week. Don't forget that I've been putting my orders in the book just to make sure I'll be filled if it's done overnight and quickly, which can be done this way. Regarding Ethereums and other cryptos like altcoins, there is a different structure to me in here. This is the reason why I told you the most interesting scenarios in cryptos for the weeks to come, at least from my point of view, is to favor spread charts, to favor buying altcoins versus Bitcoin. So instead of increasing your exposition to cryptocurrencies, like using your fucking dollars to buy some shit, you rather like to use your Bitcoins to buy some other shit and spreading the risk throughout your portfolio, because that's what I see, all right? The thing is that I see some further bullish potential, slight bullish potential, possible on some cryptos like Ethereums and stuff like that, who could have a final bursting movement, a little bit FOMO probably. Like this one could be doing something like that and just to terminate. It's going to be fast because this one is not going to be an extended wave structure, and you definitely need to understand that. Just have a look at this. You know your Elliott wave stuff, for those who really like that. Okay, I kind of used it, but it is not the decision maker, all right? So we could have a wave 1 in here, fast impulse, 3 sets of waves. It could be an extended wave 3, and then we'll have an extended wave 5. It can be a little bit FOMO because there might be some stupid buyers in this thing, but I don't nearly think it. All I think is that Ethereum can just break out this area. Normally, wave 5 catches up on the trend channel and reverses. So I would say, yeah, we go there, 340, 330, and bam, it goes down. All right, so is there a lot of potential into the altcoins? I don't know. It's probably on a unique crypto basis, which means this project will attract money, but this one far less money, this one crazy shit ton of money. So it's hard to say, right? I think it's something beyond my control. I think it's concerning the white papers and stuff like that, and the net news announcements. So things you cannot even control. So if you have those things in your portfolio, then you might be aware that either you really know what you bought and you really have some insider information and stuff like that, or it's just probably going to be random, which means you don't really know what kind of news flow will come out of those projects. You don't know how the market will take them. Sometimes the market will just crazy buy a shitty news, or they will just do nothing out of what you think will be a big major game changer news, all right? So be aware, it can be tricky, and most likely it can be just subjective analysis, which I hate. Reason why I told you, if you want to do this kind of spread chart, you take a little bit of Cardano, take a little bit of Ethereum, Bitcoin, ETH, BTC, ADA, BTC, Ripple, Bitcoin, all those things. You stick to the top 10, and that's what I said. All right, you just spread the portfolio to make sure you don't have just a shit ton of Bitcoins and nothing else. All right, that's it. At least that's how I do spread my portfolio. So I took a little bit of Cardano. I do have still my Ripples, Ethereum, and Bitcoins. All right, so it's a rotation. I took a little bit of Cardano because I gave you the trade, so I definitely want to be into this. I hate talking about trading that I don't do. All right, as simple as that. But to be honest, I don't have a lot of Cardanos. All right, simple as that. It's just a little bit to follow the trade I've been talking about. So anyway, now let's go to the major topic, cryptos aside. So we're talking about the dollar. So we go straight forward to DXY and swing perspectives. All right, so weekly charts, and this is what we've got. So let me just delete all the lines. If that sounds like nothing to you, it definitely isn't to me. We've got a big amount of volumes who've been exchanged last week. We've got a bearish Marubozu following a resistance testing. So we finally rejected a 61% Fibonacci retracement. I was hoping for this for quite some fucking time, and this should really ring a bell. All right, so let me just do something different, because I like to do this because obviously I may be biased, and I'm clear with that. I don't really give a shit, all right? If you try to make me change my mind, no one on earth will make me change my mind, no matter how crazy good your Your arguments could be, I don't really give a shit. I have my own conviction and I'll follow only this. Unless technicals doesn't follow me. So I do trade what I think whenever I think it's tradable. All right, that's impossible. That's really important. That this second part must not be subjective. The first one is, and like I said, I might have a strong bearish bias against the US. Some people think I do. That's possible. Once again, I'm not going to counter this argument. It's not even important to me. What you need to figure out is that to be a trader, what you need is two stuffs, is two elements glued together. You need to have a strong conviction. If you're if you're a switcher, I mean, if you're ready to be bullish and bearish the day right after because someone else told you should be bearish, fuck that. You're never going to be a trader. You need to have some balls, but not crazy balls in the way that you're right and the world is wrong. No, that's not how it works. You build your own conviction. If things end up being in the wrong side, then you're ready to change, all right, to change your mind. I might be wrong, and in that perspective, I'll eventually change my mind, but that doesn't mean I will trade on the opposite direction. Remember that what I trade is what I think when the actual right timing is there, when the actual right risk management shows up, and then only future will tell me if I was right or wrong, all right? And I don't know the future. So what we're having here definitely goes along what I thought. We had a weekly signal a few days ago following a price reaction in a price filter area. So now let's just work a bit. What the fuck is that? All right, if we react in there, what kind of context does that look like? I give you just a few seconds to think on your own. Once again, you can pick the right choice or the wrong choice. But normally in here and to me, there's not a lot of options, all right? This is just a bearish range, all right? Which means we're ranging, and we're ranging with in a range in which we break supports and we hold on to resistance. Remember, what are the rules to bearish range? It's we need at least 61% retracement. We need to be in context with a signal and a triangle. This is exactly what we just got. The problem is we've got a squeeze. So we're in a bearish oscillation cycle, and we've got a squeeze, which means can the bull wrong foot me once again and break me up? The answer is yes. In a technical perspective, yes, they can somehow do it. They have to break me up because this is a squeeze and we're in a bearish range and we've got bearish signals. So in terms of odds are significantly more bearish, but there is a risk, and you need to understand that. So if you're fully freaking leveraged on the dollar right now, like you've bet, you just sold your house to sell some dollars. No way. That's not how it works. All right? There is a risk, and it's not negligible. We've got a squeezing structure. The thing is that normally squeezing structure tend to go either to follow the trend, but I don't nearly even see a trend in place and in motion in here. This trend is freaking mature, right? We definitely wave 1, 2, big trending wave with the breakout, pullback, and final excess. So the trend is over. This is the fucking reason why we're bearish ranging. And you should really get that, all right? We're bearish ranging in here. And the problem is that if you have a broader look, this is where you'll see that we're actually terminated a correction and the major trend is bearish. So we might be about to trend instead of ranging. But even in the best case scenario, we're bearish ranging, all right? In the worst case scenario, we're bearish ranging to prepare for a bearish trend. And that's even worse, all right? But anyway, to me, far more bearish odds in these structures, and that's important for you to get that. What we had last week is just a technical switch in my direction. I thought about this scenario for quite some time. I hope you knew about that. I've been talking about this for quite a long time ago, for quite a long time, and now it's showing me some confirmation. Have I won the battle? No. But have I won this tiny battle? Definitely yes. So what do you think I've been doing last week? Just so for you to understand. All throughout the week, and it's been done, it's been said publicly, I bought some euro dollar, a lot, not a lot, but I start to leverage my euro dollar position. I start to leverage a bit on GBP as well. I'm already leveraged on USD GPY, I hope you know by now. I've been reinforcing USD CAD, so I've been increasing my bearish exposition to dollar. I would say significantly increased. I almost doubled all of what I had previously, but still, is that enormous, like a 5 times multiplier? Definitely not yet. I just started to rise my exposition, and I'll keep on doing this for the week ahead. So in a swing perspective, I'll try to catch up any pullback I'll have on Eurodollar, GBP, USD, and eventually USD, GPY. All right? You need to understand that. But a pullback doesn't nearly mean that what we have today is already something I'd like to buy. All right? It's just, I will talk about those structures in a little bit more details, but I think the focus is definitely on Eurodollar. Anyways, you can see the crazy opposite structure shows up in here. Nice bullish Marabuzu volumes. We're starting to dip a toe into positive momentum. We haven't been doing this since May fucking 2018. So it's a year from now. It's more than a year, sorry. It's even more than a year since we had a weekly positive momentum on the Eurodollar. So at some point, that doesn't even mean I'm right. We could just be rejecting this area and go for a strong bearish momentum. Or we just reversed a 61% Fibonacci retracement in the context, and this is just a bullish range, just like the bearish range we had on the dollar, which means what we'll do is that the targets will be beyond the previous stop. There will be a risk management in here, but that's it. And anytime we get to break this area, we're going to reach out to a target. All right, so don't forget that this is the area where everyone will be bullish. This is the area where you're going to take low risk. This is the area where you take some risk. All right, this is the area where only anticipated traders will trade. And obviously, the more aggressive, the lower the position size, the lower the average price will be, because you took the risk ahead of the trend. That's what I teach you guys, to take the risk in the range. Because some people may think the range is dangerous, it's so complicated, it's so tricky, trappy. No, this is the easiest structure to trade and to get some easy money out of. And then you take that money and you spread it all over again into the trend to maximize your profits. All right? That's what I'm teaching you. That's my target for Eurodollar for the reasons you know. I think that for many reasons, the biggest monetary aggregate is the dollar, definitely, and I think it is about to shrink significantly if another recession is about to show up. For many reasons, I think nowadays the globalism and the globalized world we have doesn't want a leader, and I think everybody is fighting for leadership. I think the U.S. has been this leader for quite a long time, not to say probably the almost the entire globalization area and globalization processes. But I think nowadays this is just about to end. I think that an era is about to change. A new era is about to come over. Not a new paradigm, all right? Just a new era in which the American supremacy is just not going to happen. I'm not saying the US won't be the first. I think they still will be. But this supremacy isn't going to be there simply because the other economies are just gaining strength in a manner that US can no longer impose what they want to the rest of the world. All right? It may have some deep implication in the geopolitical structure of this world, which means it will obviously have a lot of impact to the monetary aggregates and to the political powers and stuff like that. And yes, it would change quite a lot, I think, and it will also change the market structures. Not necessarily the structures, but anytime we've got a recession, the market just rise from its ashes and like restructure itself. So yes, the market we could have after a recession will be slightly different. Call it however you want, more automation in there or whatever. It's just the structure will be a little bit more different. So this difference generally comes out with something breaking, all right? Which, well, the recession, generally something breaks in the market. It doesn't work like it used to be, like The market is naturally bullish, all right? This is what we call generally when you want to trauma the market. Generally, when it goes with recession, with price going down, we're destroying value. And what you need to understand, and I've been clear with that, I hope it is not new to you, why do I think the dollar is the most and the biggest loser in the weeks and months ahead? In a swing geopolitical perspective, all right? Like I said, US will probably remain number one in the geopolitical dominance, but still, the monetary aggregates will probably be changing to readjust, because nowadays we do have a yes, it's not even a dominance. We've got the dollar is the first currency. I mean, the world is trading in dollar, and I think this is not going to be the future. I think the future is just, we're in a globalized world. Euro area is crazy important right now in a geopolitical equilibrium, all right? Some people will say, no, Euro is shit, the Europeans are stupid, all right? Definitely the US type of thinking that they're the best and the rest of the world is just pure shit, which is really and definitely not true. China has been gaining so much strength in the latest 15 years that the US are just doing anything they can to just slow them down at some point, but this is too late. I mean, China is definitely the first power nowadays, and the thing is that US have some supremacy, but the economical control is in China right now. So whether you like it or not, the only thing you have nowadays to just dampen this is the dollar being an international currency. And what do you think China is doing? They're just trying to destroy it. So is it going to happen? Yes, I think it will. I think the international dollar transaction is no longer be in place a few years from now, which means the stability of the dollar is not going to be there anymore. So I expect some volatility on the dollar, definitely will, because it will be the end of an era and the start of a new one, in which the dollar will no longer have stability because of international transactions. So the dollar will be priced just like any fucking other currency. And that is going to have some significant changes in the forex market, obviously, first of all, but not in just the markets, not in just the forex. It will have a lot of implication in the stock market itself and the monetary aggregates. So, is the Fed going to change the way they do things? I think they will. Yes, obviously, I think they will. Is the dollar going to change, going to remain in the current price area? Definitely not. I think the dollar will be some different areas month from now. Will we get back to those prices later in the future? I definitely think we will, because the currencies are just ranges. But I think just when we get from one boundary to another in a big monthly range, all right, let's consider that it is mostly even a quarter range, all right. In this type of range, as you can see, we've got some room to the upside, all right. Maybe in the future, like 20 to 30 years, maybe this range will reverse. And in a globalized long-term perspective, maybe the US will gain over the euro area. That's a possibility. But in the current stage, all I can tell is that the dollar is losing strength simply because they're losing their supremacy. Slowly but steadily, it's something they cannot avoid. And I think it is about time to destroy the US dominance, the US dollar dominance. Once again, I'm not talking about the US, I'm not talking about the Americans. In here, don't take it personal. I mean, if you listen to me and if you're an American, you must say, oh, this guy is a bullshit, he's a bullshitter, fucking European, thinks he's better than the others. It's definitely not. Don't think in a personal manner in here. We're talking about people aggregates in here. We're talking about macro psychology. So the psychology of global big amounts of people. I'm talking about the American people with a big A. So yes, you're an American, but you are a human being. You're your own personality, but you're under the tiny influence of your American sentiment. I'm not saying you are, but you're influenced by. That's important for you to understand that, all right? It is not about racial stuff or whatever this is, all right? It doesn't even matter. It's cultural. Which means when I say Chinese, it doesn't mean people who has Chinese eyes. Fuck that. That's not what I mean, all right? If you have Chinese origins, if you're born in the US and you've been raised like an American way of life, then you're an American, all right? It's nothing to do with races. Don't even nearly talk about that, all right? So the thing is that there's an American way of life, as there is a Chinese way of life, as there is a European way of life, there's also a Russian way of life. And these are the four major, big macro psychological way and visions of life, all right? And this is important for you to understand how each one works, all right? I've been to China, been to Russia, been to the US, so I know what I'm talking about. I don't know for sure, but I have decent ideas of how those different aggregates do tend to see the world. And there are some opposing powers in here, and we can definitely see this. All right. So for an American, it's easier, and it's probably due to geography and history as well, a lot. The thing is, yes, for an American, yes, the Europeans are definitely different people. You cannot really understand an European way of life, but this is the closest to you, all right? So compared to a Chinese way of life and a Russian way of life, for an American, yes, we can somehow understand the Europeans. They might be crazy, and those French are just, all right, you have your vision and you have your own opinions about Europeans, like we do have our own false opinions about Americans and things like that. Most of what we think is false. This is the first thing I figured out when I traveled. Everything you think about a country, about a psychology and stuff like that, is generally just false. And the reality is most likely going to be the opposite. So when you say the Americans are dumb and stuff like that, they like guns, and no way, just a piece of Americans do this, but not the entire stuff, right? Just like we might see the Chinese are very disciplinary and stuff. No, none of them are just like that, right? So once again, not on a personal level. We're talking about big amounts of people, about trends among the population. So Americans can understand pretty much Europeans. So we are the closest one to you, the one you can understand, Western countries, stuff like that. So you have a lot of problems understanding Chinese, just like you have even more problems understanding Russia because of the global wars and stuff like that. So we've got history, and the Russian doesn't like America, obviously, either. So the thing is that it's a kind of a bipolar world, which is actually four poles, all right? But we've got the Western countries, Europe and US, and we've got the Eastern countries like Russia and China. And these big poles are kind of fighting each other. And yeah, there's obviously a dominant in each one of those two. Like the US is definitely dominating over the Europe, just like China is dominating over Russia. But the thing is that those domination, I think they're about to dampen. Like, we're getting back to average. That doesn't mean the trends won't remain. I still think China will still remain stronger than Russia, but I think the supremacy they have is about to dampen. That's what I think is the next cycle about. A cycle that will probably take 10 years, all right? We're talking about macro cycles in here. So a 10-year, let's say a 5 to 10-year cycle in which we're going to get back to average, which means the US will probably lose against the euro. That doesn't mean they'll not remain the first. Just saying that in terms of economical dominance, the dominance will dampen, which means we'll probably destroy more dollars than we'll destroy euros. That's all we say. All right, that's all I'm saying. The US will probably still remain the first. Not even a question. Not even a question. Just like, compared to the economy, the size of the two economies, normally Russia will remain lagging versus China. But still, those big aggregates will change. And I think Russia will probably be gaining against China in the forthcoming years, just like I think Europe will gain versus America in terms of relative monetary aggregates. That's what I'm trading. This is why also I think the dollar will be the biggest loser in a recession potential trade. Because if we do, then simply we're going to destroy where the money is. Generally, and obviously in a monetary perspective, the US is definitely the biggest economy in the world. In the market economical world, definitely the US dollar is the biggest monetary aggregate. So if we're about to retrace, kind of think about trends. Trends is moving in one direction, trying to go as high as we can until we don't find enough gas, and then we pull back and we retrace down to generally moving averages and stuff like that. I think that's exactly what's about to take place. We've been trending, the US has been dominating, and now they're losing this dominance. They're starting to retrace back to averages. So they will probably destroy the biggest money in dollar. So this is why I'm shorting the dollar. Not because I think the US are shit and they'll definitely end up. No, I think it's a context. And Trump is just exactly what I wanted for this to trigger. Trump is the guy who thinks the trend is still there when we're objectively consolidating already, but he doesn't want to see that because what he sees is a biased vision of the US. He don't see the world as it is. He sees the world as an American and not the kind of American I would say is the smart one. So Trump is dumb, and let's be honest, he has a very narrow vision. No one makes him changing. So the guy is just stupid. He's probably wrong, but he thinks he's right, and anyway, he's not going to change. Just like I would be. Let's be honest. But the difference, I'm not the president of the United States. I'm just a tiny trader, and I do have some securities back then. So which means I'm not trading just what I think. I'm trading what I think when it corroborates what I see. And when technicals are suggesting I might be right, and once again, if I'm wrong, that just impacts me, and the impact is pretty narrow. Right? When I'm wrong, I'm not ruined. I just change to another scenario, and when that's just it. If Trump's wrong, it's just going to bring the entire Americans with him, which is the big danger. The guy is probably wrong. He doesn't know, obviously, because he's too narcissist to think that he might be wrong and to just consider someone else's vision. So he's just move on. It just goes with the plan. The plan is to do what he said, and he'll do as long as he has the power to do. The problem is what he's been doing so far is just freaking credit negative, which is exactly what I wanted. The problem with the US is just that you're in so much debt that you can even imagine this. So you look at the Europe and you say, no, look at Europe like, oh, Italy is freaking in debt. Just look at Greece. They were so fucking in debt. So, no, you're the bad guys. We are the good ones. Look at our debt. It's well structured. No, your debt is pretty fucking bad structure. You no longer have the gold to pay for this. China does. So yes, you're in big trouble actually. And let's be honest, if you think you don't, then you might be digging a little deeper in here, because objectively speaking, the dollar debt is freaking shitty. And what you just done with the tax plan is just making it even worse. So the problem is you're trading with money you don't have, and you better hope that the trend is not about to reverse, because if we go ahead for a recession, you basically just made a check without the money on the bank account. So yes, you definitely brought your unemployment level down to 3.6%, which is definitely not the right level. We're most likely close to 8% in reality. But still, that's a good number, all right? That's far better than what we have in Europe. So I'm not playing the game of who's the best, all right? The US definitely is number one. The thing is that you think you're much better than you actually is, which means when the reality will catch up on you, the dampening will be stronger, all right? We know that Europe's not perfect, and I think that's the difference. We don't think we're the best. We just think that we do our best, and that's the difference, which means, yes, we might suffer some recession as well, but who's going to suffer the most? I think the US will. This is the reason why I think some capitals will just bleed out of US to just go averaging in the euro area. Reason why normally the monetary aggregate will probably favor the euro, just because people will just so much fear the dollar at some point that they'll just be ready to buy any fucking thing else. And the euro will probably be the first thing you guys understand, because if you have to invest somewhere else than in the US, I've been talking with a lot of Americans. I think regarding China's and Russians, this is definitely the US psychology that I may understand the most. I'm not saying I do have the final truth once again, but I've been talking with many Americans to, like I say, I'm talking about a single American, but trends within the American population. And yes, if you're forced to invest your savings somewhere else than in the US because you fear the US is just not going to be well, normally an American will first say, no, you know what, fuck that, we're strong, so I'll still invest in my country first. Because yes, many Americans do tend to think this way, and I understand this. I understand, and I think that's even the beauty of America. Even when it's shitty, the Americans will still favor their country first. So even if dollar bleeds out, it's not all the dollar will bleed out. Definitely not. All right, it's just going to be a trend of some people just spreading the money out there, not just in the US. And the first thing they'll do, get to what they think they understand the most. The Europeans. This is the only reason why. You might be thinking we're shitty, we might be thinking our European Union is unstable and stuff like that. When the shit will hit the fan on your own country, the only thing you want to put your money where, you want to put a bit of your money into is probably going to be Europe. Simply because you're so different with China, you don't really understand them. And Russians, history just split you two apart. So you will basically say, all right, you know what, I need to invest some of my money elsewhere than the US just to make sure I don't risk it all in here. All right, you're probably going to invest 70% of your money still in dollar, and obviously you might be losing a little bit of money. Recessions destroys money, and that's how it goes. You don't fight that. The economic cycle creates a shit ton of money, and then the recessions destroys part of it. But still, it's a positive thing, which means we destroyed less money than the money we created. So yes, it's still positive at some point. This is because growth, obviously. So some people may be discussing about that, the perpetual growth and the problems we create on our environment because of it. So yes, it's a dispute. Obviously, we're not going to be talking about that. But in terms of economical cycles, the way they were playing, and if they keep on playing this way in the future, which is a big if, then that's how we do. We create a shit ton of money, we destroy part of it, and then we create another shit ton of money in a different manner. That's exactly here. So if we're just about to destroy some money in the US, then that's not the end of the world. We've done that in the past, and we'll probably do this again in the future. So it's just to create more money, we might have to destroy a bit in between. And probably it may cause some debt issues and stuff like that. So yes, there is a debt problem in the US, definitely is. And the problem that you don't really would like is that China handles this. So it's pretty much China has a shit tons of T-bonds. So if China wants to put you down, they can do it instantly. They just need to sell the T-bonds. So the thing is that US debt is at risk. US stability is at risk because of Trump. I mean, Trump is nothing like a stable guy. All right, it's pretty much the opposite. So you better hope that everything goes along the plan, everything that goes fine, there's no recession, because if there is a recession, then, like I said, volatile dollar, which means the IMF will probably set its own currency for international transaction, which means they will praise the dollar. So what brings stability to the dollar? There is the American stability for the debt. The US debt has always been the most stable. Nowadays, not the case. So US debt is no longer stable, at least it's far less stable than it was in the past. And then you've got political instability. I mean, Trump has been putting some shit all over the globe with his trade war. So why the hell would we have a stable dollar when the guy who's behind it is just doing anything it can to just fuck up the rest of the world? So that's not possible. Dollar will be volatile, which means volatile currency no longer having its stability with international transaction. Like I said, dollar will probably be the center of the maze in the forthcoming years if returning to the mean is what we're about to do, because that's the goal, and that's my conclusion in here. Now let's have a look at those economical areas. So we can do Shanghai Composite or Hong Kong Index, obviously. We're not going to do trimester, we're going to do weekly, I think, or dailies. Yeah, I think dailies are great. All right, so we've got 50 moving average in here, synchronized to the context in here. So the context takes a month. All right, so these are 50-month averages. All right, so you understand. So these are 50-month average, and look at where we are. So I think we're going to take Shanghai, definitely. All right, so out of a 50-month average, we're far below in Shanghai. So we're already trading below, because obviously we've been consolidating for quite some time, and we're crashing since the 2015 bubble. So they've been crashing because obviously the surge that preceded was staggering, obviously, but now we're consolidating. So we're late stage bearish trending on Shanghai Composite. We had all the waves for some bearishness, so we might make another dip, but if we do, it's probably going to be the last one, if this one isn't already one, which means in Shanghai I think we're close to some investment areas. It all depends on how brutal the potential recession could be for them. But I think most of the impacts have been priced in. So to be honest, do I start to invest in China? Yes, I did, just like I bought Xiaomi's and stuff like that. I'm starting to think the majority of the bearish trend is nearly terminating. I still think there might be another final dip because of a globalized recession that just contracts monetary fluxes, and it will obviously be not good for businesses, and probably, so it's hard to say. Either we're going to find a support in here in China, or we're going to go straight to this, which means we're going to make the third lower low, but probably the final one. All right. So Shanghai, we're already below the averages. So the job has been done for quite some time. There's not necessarily a lot more to do. Just like I said, anything putting us down is just putting us to very attractive prices for the next economic cycle. So is the money getting into China already? The answer is, I think, yes, it's already starting to get in. Now let's have a look at Russia. All right, we rarely have a look at this one. It's RTSI. So let's have a look at this. All right, in here, 50 averages bullish after being quite significantly bearish for a long time. All right, so in here, we're already attracting capital. All right, you need to understand this. Returning to the mean, it's already in motion. All right, Russia's been purging everything from 2015. We're going bullish, but still, I assume that if a recession shows up, there will be a lot of money destructed in here. We can see we're ranging and we do have breakouts, so going on the opposite direction wouldn't necessarily surprise me. So we could have globalized recession, obviously hitting Russia as well, but still, normally we oscillate around this 50 monthly average, which means you take what we've done on top of it, all right, and whenever we break it down to the breakout point, which is probably going to be there, we generally double it to the downside. So you take a cycle zone, all right, and you replicate it to the downside. Sorry, that's not what I wanted. All right, this. So it gives us an average target in here at about 800. So it's not a big of a deal. Out of current prices, it's a minus 40%. So yes, it's significant. But after that, they'll have some strong potential if there is another economic cycle. And I said if, but normally there will be, all right, if there's no big cataclysm in between. So Russia, 40% tops. I don't nearly even think it's going to be more than that, and I think it can be even less. All right, so out of current prices, I think Russia is to be bought anytime it goes to minus 30. All right, I think this area is a nice support area to get into them. So start buying at 30, up to 40% drops. Like we said, in Shanghai, there's no big. All right, out of current prices area, I think even a minus 20 to minus 25 is a buying area. All right, then we have a look at Europe. So we take the Euro stocks. All right, so same thing in here. The average is pretty much flat. We've been going up and we can go below. All right, that's totally possible. All right. So we can just oscillate in here in the euro area. So first, in best case scenario, just go there, minus 10%, no more than that. I think we can go lower, all right? I definitely think that this is most likely the area where the euro can go, minus 20 to 25%. But this is where the USs are, all right? The averages are here. We've built a crazy fucking range in here, which means if we ever get down there again, we're going to break this 50 average, and we're generally going to double down the range we built on the top, which means breakout, doubling it down gives us a target in here. And in the US, this is where the ugliest show up. It's minus 40% drop. So if you've got minus 20 to 25 in the euro and minus 40 in the US, what do you think is going to be filling the 15 remaining percents? Just think about it. The answer is really simple. It's the euro dollar. It's simple as that. Some of the money invested in the US will probably be invested in the euro instead for a little bit of time. All right? And the thing is that we might expect, and this is why I think euro dollar is about to take 15%, which is not the end of the world. It's just what the pre-signals have been suggesting. In this bullish range in here, if we find some bullishness in there, this is where the targets are, and it's just 15 to 20% in favor of the euro area. This is why I think the US have much to lose than the euro, simply because you fought it till the last minute. But if the shit hits the fan, if the recession shows up, this is where the money will be destroyed, in the US. Pure and simply. Money will be destroyed everywhere in the world, but this is where the biggest monetary aggregate destruction will be, in the US. Reason why I don't nearly think the euro is strong. I think every currency is weak if we're heading toward a globalized recession. But the thing is that the strongest will lose the most. And forex is not about assessing how strong a currency is. It's assessing how strong it is versus other currencies. There's a relative strength, and you need to understand that. The relative strength is forex. I'm not saying the dollar was shit. I said every currency will probably be shit if we're heading toward a recession, but who's going to be the shittiest? And I think it's probably going to be dollar, at least for a time period. It's oscillating, which means nothing is granted forever. There will probably be a bearish trend on the dollar, but then the dollar will recover and it will retrace and stuff like that, all right? It's not a never-ending process. It's just a cycle, a global macroeconomic cycle that I think for the next 5 years is going to benefit other currencies just because they'll be as shitty as the rest, but just the dollar will just lose so much then other currencies will act like safe havens. All right, that's pretty much it for today. I'm going to leave you guys with that. I just wanted to make this thing for quite some time, and now that we have some early activation signals from prices, and that's important because I've been waiting for this for quite long, all right? What we had, once again, is a weekly candle close, significantly showing some bullishness after a month of hesitation. I would still say, yes, we're trading some monthly scenarios as well. So those who are a little bit more patient might be waiting for June's monthly candle close to make sure that we confirm this monthly bullish engulfing. Because whenever we monthly bullish engulf, I think there will be no other way but to trigger this kind of trend afterwards. All right? And everybody will just follow it. Obviously, I'm an anticipated trader, which means my job is not to trade trends. My job is to trade ranges ahead of trends so I can maximize my profits whenever the trend triggers, and obviously if it triggers. And sometimes I'm just wrong and I'm going the wrong direction, therefore I'm taking a stop loss and moving to something else. See you guys again later. Obviously on Wednesday we're gonna start the first podcast surrounding futures scalping trading, and the first one will be about psychology. I do have the affiliated link, so I'll just put that in motion and share the link throughout the week on Discord, but still I'm hesitating about the timing. I'd rather like to make the videos first, all right, just to force you waiting before you try to open your accounts and stuff like that. I want you to have the knowledge before putting some money in an account and start trading without having the broader picture. So I'll probably make the shows first, at least the first couple too, and then and only then I'll eventually start giving you the affiliation link to open your accounts and stuff like that. All right? Probably for the third one. Remember, the order is going to be the first one is about psychology. I'm going to describe what is required to be a good scalper and most likely how many people are not fitting for scalping. Then in the second show, we're going to talk about technicals, how to use the indicators in a scalping perspective. Some information will have to be prioritized and some other will have to be dampened. I'll explain everything, obviously. And the third one will be about order book, how to read the tape, how to read demand, supplies on the order books. And obviously, at that time, this is where I would like you guys to have your accounts opened so you guys can be able to look at this in the same time. All right? So it's a long process. I'll also have to take some vacations on late June, which means there will be some pauses on the videos, obviously. And the thing is that I think I'm going to have to delay the MCQ test for June for a simple reason. I think the priority to me is to make those scalping stuff, because guys, I know you guys are really wanting for the waiting for this, so I'm gonna make this a priority, taking care of those 4 videos about scalping. And the thing is that when I make the MCQ test, what's important to me is not the MCQ test itself. I don't really even give a shit about asking you questions. What I care about is when we do the corrections, to see where you fail, where you succeed, where you can be better, when I need to readjust my educational content, all right? So this is what it's important to me. The thing is that last time we've done the first MCQ test, the answer, I mean the correction, was very delayed from the actual test itself. And that was really a problem I uncovered, and I definitely don't want to replicate it. So next time I want us to do the MCQ test and make the correction just a week after. So as I won't be fully available in June, as I want to prioritize the scalping stuff, which means I'm probably going to delay to July for the next MCQ test. I'm sorry, I know I've already been delaying and I will have to do it again. So it's not false promises, it's just I'd rather like to do it well rather than do it fast and do it nasty. So we'll do it, definitely we'll do it in July, that's for sure. No, there will be no delay in July, there will be no. The thing is that it's the June's vacation who just fucked me in here, all right? So I'll keep you guys posted about that. I'll try doing this early July. As soon as I'll get back home from my vacations in July, we'll take care of this new MCQ test. Bye guys, see you later.